I'm curious kind of what paperwork did you need when you first started out, and what paperwork are you doing now? Are people that you're borrowing money from, do they have a mortgage on the property, first lien on the property? Like, what does that process look like?
Yeah, I know that leads me in perfect, because I was about to say a really good way to structure deals early on because if you'll talk to a lot of people that say, hey, the best way to invest private money is to do a first lien position. But as Sharad just said, there's not too many houses you can buy for 50,000, right? But the best way that I found to do it is you could get somebody in for 10, 15, 25, or 50,000. And what I did is I put them in as a second lien on an existing property. So initially I would go to, and this is actually how I first raised money, was people I had relationships with, right? Like I wasn't soliciting them. These people I knew, I would say, hey, let's do a $25,000 line of credit, essentially. And they were basically the bank. And then what I would do is we would have two documents, right? It was the promissory note, which outlined the terms, and then a mortgage. And it would be a second mortgage in that case. Because I would show them this rental property and say, hey, here's my rental property. Here's what it is worth, today's market value. Here's what I owe on it. Here's my equity. And then I would show their little sliver. Basically, they were a little piece of the equity, to where maybe they would allow me to go up to 85% of the value, but it was a stabilized rental property. So I still felt like it was a good investment for them. They were protected. And also the property had cash flow. And honestly, some of the investors that I work with, they're like, I like this because I know this is a good property of yours that has cash flow and equity. So I know you're not going to let that thing go. So it made them feel comfortable. And then it was well documented to where they felt secured. I mean, if something were to happen to me, literally that property cannot be sold without them being paid back, right? Because the mortgage was filed behind the bank. It is important that if you're doing this, you let them know, hey, you're in second position behind the bank, but they're still in a good spot.
And then are you personally guaranteeing the loan?
That's another good question. We've kind of gone back and forth. Typically, it's in my LLC's name, but that's one of the things too, where it's like, they know we're good for it. Like, yeah, I mean, we're going to take, I guess that's another thing I'll share too, is a lot of times we put people into deals where I structured the deal to where they were actually not going to, like, I've done some more like profit share deals where the profit share wasn't going to quite hit percent. It was 10%. It was going to be like 4 or 5%. And so they weren't even taking a loss. They were just taking less. And I'm like, you know what? I'm actually going to take a little bit out of my profit because I want to at least deliver 10%. Because I'm thinking more of the long term, like I want these people to have a good experience, go tell more people about investing and be able to further grow, right? So I took a little less on that deal to ultimately get them a good return. And in the same time, if I had to take a loss, like I would have ate the loss.
I've had to do that also, just to maintain the relationship. Honestly, like in private lending, it's like relational business, right? I mean, the more you nurture the relationship, and you would be surprised, at least I was, raising money from people that I never thought would be willing to invest with me on, or invest the kind of money that they did in some of these projects. But I've done deals where initially when I was starting out, I would do, hey, you just provide the money, I'll find the deal, I'll manage the entire project, and you'll get 50% off the net return. And then with the minimum guarantee also, that where I would say, okay, we're going to make 40,000 on this deal, you would get 20. Even if you make 30, I would say you take 20, I'll take 10. I just want to, respect the relationship and kind of what we did up front. And then they would respect that. They would come back with more money because they know I'm good for it. I'll make sure I cover their part. So with that, what sort of interest rate are you noticing right now, that you're paying for your private lenders?
It really depends on the person you're talking to. We've done my range right now is probably 10 to 12%. We're not typically doing more than 12%, but even like it's back to like 6 months ago, I was actually trying to shift back to more of like 8% because I was giving these people a good, safe, secure return backed by real estate. So I was going to start to shift more to 8%, and I'd like to do more at 8%, but realistically in the market, not too many people are getting excited under 10%. So typically,
and are you doing any points?
No points. Yeah, that's one nice thing is I work with. Yeah, to me, I think that's the big difference. And I'll sometimes I've had private money lenders bring up points before, and I'm like, no, this isn't like, either way, like you're not if I'm going to get hard money, I'll pay points, right? And sometimes I got to do that. But typically my lenders, they're getting a better interest rate. And to me, that's the benefit of like raising private money is not paying points, right? So typically we don't pay any points.
And are you paying them back monthly, or are you paying them back after the project is done, or you refi your money out of the deal?
Yeah, depending on if it's a flip, we'll typically just do one payment at the end, which is a lot easier. And that's another thing too, is depending on how they want to play their taxes. Sometimes if they just want to roll it all in, like they can kind of push their tax, which they're basically, because if I pay them back and they don't roll the money, they're going to show that income, right? But if we roll it, that can be a benefit to them. So a lot of times I'll just try to put it on the back end, and then we'll figure out if they're going to roll it or not. But I do have some where it's like, hey, it's a line of credit. I've had some lenders that are like, hey, I want to be paid monthly. That just makes them feel better. And that's actually a really good thing, because then they see a check coming in every month. They build even more trust. So then when you go to those people a year from now and they want to invest more, then they've actually been seeing payments. So that helps too.
And yeah, Corbin has a question. What is your typical interest again? Are you, an average is okay. Are you averaging like 8, 9%, or it's more like double digit, like 10, 11%?
Yeah, we're definitely averaging between 10 to 12. Honestly,
Yeah.
we're probably averaging 11. Yeah.
Yeah, I think that's where kind of we're at. I was just checking. I have a line of credit with the local bank that's at 10.25%. And then, but the private money that we do straight 10%. It used to be 9, but now, a lot of banks are giving 4.5% on saving. So we've had to like bump it up to 10%, just to kind of be competitive. And Brooke has a question. Are you offering a guarantee as far as months? We will pay you 6 months, even if, we only hold it for 4 months.
Yeah, typically not. Typically we'll just, I try to have 2 different offerings. Like, hey, if you want to be short-term and be able to get out in some deals, we might be out in 45 days. Like I'm doing a deal right now where I'm literally marketing the property while I'm under contract. I'm going to hopefully have it under contract, and then I'm going to flip it in 30 days. So those people are going to get their money back right away. And I'm looking for that investor too that's looking for that, right? To where they've got, they're getting their money back in 30 days or 60 or 90, right? But if it's somebody who's like, hey, like, I don't want you to just give me, because there are investors too that they're like, I don't want to mess with this. I don't want you to give me my money back in 60 days. And then I got to figure out where to put it again. So those people, I try to put them into more of like a fixed 12 or 24 month deal. And again, that's when I'll probably go to like a second lien on a property. Or if you have a free and clear one, that's even better. And I think you can negotiate an even lower interest rate based on that. But yeah, it depends on the lender, whether we do it. But typically, yeah, we'll try to just stick it on the back end.
All right. And Philip Arthur has a question. I'm having to pay more percentage because of how well the stock market has been performing. It's a great question. So have you run into that, Casey, where someone says, hey, I can make 8, 10% in mutual funds, I should expect more?
No, you know what? You would think that more often, but when you start to really, and I thought that way, I think a couple of years ago, but really, if you pitch it correctly, well, they're not seeing the volatility that the stock market sees, right? That we're going to show them in real estate. So I think typically if they understand if you really want to get into like a sophisticated conversation, real estate is a much safer bet, and it's going to have less up and downs, right? So typically I think I can counter that one. What's been hard though is lately, like I would say 12 months ago, going and negotiating 8 to 10% was probably easier. Now I go to somebody and they're like, we were talking 8 to 10%. They're like, well, I could put it in a CD and get 5, and that's guaranteed. And I don't have to worry about any of this risk or perceived risk. Well, again, they're investing in you, right? They're believing in you, and they can do all their own due diligence, but at the end of the day, they're investing in you, right? So that's been my more hurdle, is now having to pay probably 10 to 12% based on what they can get in a CD.
Yeah, Philip, I would say the same thing. Like we actually use stock market as saying, hey, would you rather invest in stock market and have your money like, not know, if it's going to be worth the same or if it's going to be worth less. And then, we build on the relationship that, hey, you're investing, the asset that you're investing in, we have the relationship. So we're actually using stock market, in our favor. So yeah, and I would say like for us lately, it's been the same issue coming up. Hey, I can make 5% just investing in a savings account, with like 25,000 minimum. Why should I give you 8%? So we've had to kind of, do 10% also on our lending. But yeah, let me know if you have any follow-up questions on that. And yeah, Michael has a question. At the end of the year, what type of tax documents are you providing your private money lender?
Yeah, pretty simple. That's the nice part about doing debt, right? And doing like a private money interest rate. When it starts to get into equity, that's when it's more complicated. But for now, I definitely recommend just doing interest, right? Because then it's just a simple, I think it's a 1099 INT form,
Yep.
right? And we just keep track of the interest we paid them throughout the year. And yeah, it's really just like you do with all your other 1099 contractors that you might pay. You just pay them a 1099 INT.
Yeah, that's what we do when we borrow money from someone. We ask them to fill out a W-9 form. And then at the end of the year, my bookkeeper just takes care of everything. She just prints sees everybody that we paid interest, sends out a 1099 to them by Jan 31st. And I think we're good with that. Yeah.